Markets waiting all week for the numbers to come out from USDA. Now that they're out, where do we go from here? Michelle Rook has a closer look in Markets Now.
Grains in negative territory on Friday. John Heinberg with Total Farm Marketing joining us. And John, a big shock to the market there with that big increase in corn yield, and that really tanked the market last Friday, didn't it?
Yeah, it was a difficult close for the weekly there on Friday after that USDA report came out. Obviously carry over above expectation, yield well above expectation. Even global supplies, it bumped up the Chinese totals by another 11 million metric tons to go with our increased production, as well as Argentina to put the global lending stocks higher than the market wanted. So that brought in that heavy selling pressure to end the week.
So, John, we hit those new contract lows. Do you think we have a lot more downside risk in this market?
Pretty key close under that 460 on that March contract, but I did find it interesting. December hit a low around 447 before it expired, and in March kind of seemed to drift back to that area, as it closed the day on Friday. So we'll see if that's a bit of a curse that maybe we've kind of washed this thing out to start the week or the end of the week to start this next week. Or are we at a point here that things maybe still with the heavy supply picture got more room to fall on the technical side?
Soybeans obviously absorbing higher yield in production as well. We ended off of lows, held the $12 mark in the nearby beans. Do you think that's going to hold the longer term?
Again, we still got to watch how this picture shapes up. The disappointing side for me the last couple of weeks has been what's going on the export side for soybeans. Even though the yield got bumped up and the carryover did go a little bit on the higher side, that Argentina crop is a big factor. We still saw some adjustments there. Rosario Grain Exchange raised up their projections. It will easily absorb what currently is being projected as the losses in Brazil. So it's going to be a tough road for the soybean market here at this time frame. Obviously, we need to still keep some demand going, even though our crush was really good again in December. But it still comes down to that export demand and those competitive prices. And those South American prices right now are pushing historical lows in terms of basis. And the opportunity to undercut our prices because of that just comes into play.
Thanks so much for joining us, John Heinberg with Total Farm Marketing. That is Markets Now. We'll have more AgDay coming up.